Hi there, welcome to Kneppyinvests. We are at the end, or very close to the end, of another trading day on the 6th of March 2024. Time is 3:08 p.m. or 4:08 p.m. for those states that actually do have daylight saving, which means the closing auction will be completed in the next few minutes. However, Market Index and TradingView are behind by about 20 minutes, so these won't be updated for a little bit. In fact, market index says closes in 1 minute and 42 seconds. Now, what I'm going to do right now is actually go through the best movers and the worst movers of the day, just to see if there's anything interesting out there. I did purchase some Ramsey Healthcare shares today on open, $55.22. Current share price is 56.47. In fact, before we have a look at the best performing and worst performing companies, why did I buy some Ramsey Healthcare? Well, this is the reason. Breakout. I think I mentioned Ramsey Healthcare in my technical analysis update video the other day, and I probably mentioned that this could be a breakout. And I think we definitely have confirmation over the last two trading days that this is a breakout. In fact, I got that confirmation yesterday. I really liked the trading in the previous 2 days. The share price did fall below $54, which was the top of the range. And then we saw a bit of buying coming in. That's why on those particular days, there is a fairly long tail or shadow below the main body of the candlestick. And the last 2 days, we have seen pretty good buying coming in. And that's why the share price is rallying. And this has all the hallmarks of a really good uptrend possibly developing and a breakout. And that is why I've purchased some Ramsey Healthcare. I once owned this company for a long, long time. Let's have a look at the weekly chart. I once owned this company for a long, long time back in the early 2010s. And that was a time to be holding this company. But the share price got to about $68 in 2015 and has been going sideways ever since. In fact, the share price right now is a little bit lower. So just because you have a company in your portfolio that does really well over a 10-year period or so doesn't mean you need to hold that company forever. And Ramsey Healthcare is a perfect example. The growth phases of company can change. In fact, Ramsey went from it being a growth company to a mature company and not growing much at all. But it seems like the market likes their February report, and the market is a little bit more bullish about this company right now. Okay, so even though the market is now closed, and we get confirmation by looking, yep, the market has definitely closed now. I'm just going to have a look at, even though this is not quite updated to the minute, let's have a look at the top gainers and top losers today, just to see if there's anything exciting happening out there. And this is the first step I will take to see if any company's share price is breaking out today. I will sometimes know after reading the announcements, but we have a sparse amount of announcements being released this time of year. And we can see the best performing company on the ASX is Next Metals, up 69.23% on very low turnover. So ignore that company. Ignore Sultan Resources. Ooh, Dimerix. So I do own Dimerix, up 27.7%. So the first thing I'm going to do is have a look to see what's happened with Dimerix. Now, I do know they will possibly release results next week in the phase 3 trials or something. And maybe the market is getting excited, up 27.7%. On pretty good volume too, 19 million shares traded. So for some reason, the market is getting excited. Don't remember this company releasing any announcements. No. They did release an investor presentation yesterday and no market-sensitive announcements today. The last market-sensitive announcement the company released was on 27th of November. Maybe there was an upgrade from a broker, or maybe loose lips in regards to the phase 3 trial. So let's just open up the investor presentation. I haven't actually had a look at this. I didn't even know they released a presentation. They probably mentioned it somewhere in here. Here we have phase 3, upcoming milestones, interim analysis expected imminently from company's phase 3 clinical trial. So imminently, in my mind, is within the next week, potentially. I'm not guaranteeing that, but possibly there are some whispers out there that maybe their results were quite good. Now, the share price or my holding in this company is now up about 40%. Will I take profits? I don't know. This is a conundrum, particularly for companies like this, who have sort of a binary outcome. Companies having a very important announcement soon to be released. If the announcement's not good, the share price could crater and dive 100%. Maybe not 100%. I'm being a little bit dramatic there. But if we have a look at Dimerix and we go back to September 2020, in 1 week, in 1 day, the share price dropped 67%. And look at the rally before that. So the market got really excited. In fact, let's have a look at the daily chart. You'll be able to see that. I still remember this. I didn't know this company existed before this day. So if we go back to 2020, share price rallied all the way up to 77 cents. A beautiful uptrend developing. And then they released some negative news. I think the results showed there was no significant difference from the placebo or something. I forget. It's like 4 years ago. But the share price on that day dropped 62.8%. And that is what can happen if results are not to what we want. But on the flip side, if the results are really positive, then you get something like Neuren Pharmaceuticals. I always wanted to say Neuren Pharmaceuticals. Neuren Pharmaceuticals. Someone did get upset with me or keep on saying Neuron. So let's go back to. Well, no, not 2017. No, 2000. Here we go. So on the flip side of what happened with Dimerix back in 2020, Neuren Pharmaceuticals on the 7th of December 2021, share price on that day rose 91.2% because it was positive news in regards to phase 3 trials. Doesn't mean the same thing would happen with Dimerix, but a way to trade this, and this is something I'm thinking about, is to take my profits, forego any rise in the share price like 91.2% and just buy on that day if it is positive. Because look what happened to Neuren Pharmaceuticals from that particular day. Many investors are really nervous and wary about buying a company whose share price has risen 91% in 1 day. I don't have that nervousness because I know this sort of thing can happen. Share price of Neuren Pharmaceuticals went from about $3 all the way up to over $20. I've taken profits along the way, but I'm still holding a big chunk of Neuren Pharmaceuticals that I bought on that particular day when it rose 91.2%. I didn't buy at the low of the day. I bought at the high of the day. I don't mind that. So that's the sort of news flow I'm looking for. Company-changing news. And Dimerix could release company-changing news either way within the next few weeks. Now, and that's really interesting that their share price is up 27.3% on no news. Atomo Diagnostics did release something today, up 22%, but their market cap is $21 million. I didn't have a close look at that, and nothing else here of interest. So let's have a look by market cap. Mercury New Zealand up that's their market cap. Mercury New Zealand up 6.2%. Magellan Financial Group up 7.7%. I was really interested to see how the market would react to their announcement in regards to funds under management. Update, January update. It looked okay. It looked okay when you looked at the numbers and the market liked it, although share price only opened up 865. So the share price actually rallied through the day. So funds under management, February 2024, up when you look at the numbers comparing to January. So total funds under management, 37.2 billion compared to 36.3 billion. But Magellan experienced net outflows of 0.2 billion, which included net retail outflows of 0.1 and net institutional outflows of 0.1 billion. So there is still outflows, and the increase in total funds under management is more than likely just because of performance of the equity markets. And maybe what the market is thinking now is this is the end to funds or to the outflows in Magellan Financial Group. And maybe we are seeing the bottom. Is this a breakout? Let's have a look. Yeah, no. Not calling this a breakout at all for Magellan Financial Group. So I'm not excited with this particular news from the company. No, I won't say the share price is in a downtrend anymore. I think the downtrend has come to an end. I think we have reached a bottom, and that bottom more than likely is about $6, and we saw that towards the end of October of last year. So Magellan Financial Group, good day today. Other big companies that rose a lot, not a lot of big companies. Talga Group up Anything else interesting here? Credit Clear, up 8%. I was thinking of buying into Credit Clear yesterday, and the main reason is we did see the share price dip a little bit. There was a breakout. See share price breaking out. There was a little bit of dip down to 24 cents. I could have bought in at 24 cents today. Oh, that's so sad. The main reason I didn't buy was just because of overall weakness in technology stocks. And yeah, the share price opened at 24 cents today. But still, there still could be a little bit of selling tomorrow. So possibly a trade. And yeah, Credit Clear is looking interesting right now. Increase in volume. Not a lot of volume today, however. And the main reason I was talking about one of the reasons why I didn't buy Credit Clear is overall weakness in the IT sector. If we actually have a look at how the different sectors on the ASX performed today, all technology indices down 1%. And if we go look at the sectors, financials up 0.8%, but IT sector down 1.44%. And the main reason behind that is simply because the NASDAQ was down 1.8%. Doesn't mean that's negative, doesn't mean NASDAQ is now in a downtrend, because if you have a look at the NASDAQ indice, let's have a look at that. It's just a little tiny blip in the overall uptrend. We have seen these little blips before, but the uptrend hasn't been disturbed at all. So that's the main reason why I didn't take a position in Credit Clear. And I have other ideas like Jumbo Interactive, Ramsey Healthcare I've already bought. And I think that's about it. Anyway, nothing else here. Okay, let's go to the worst performing companies today to see if there's anything interesting here. I'm not going to do stock of the day, that sort of thing. I'm just going through the good performers and the worst performers. Again, the worst performing companies all have a really low market cap, except for Sports Entertainment Group, down 19.2%. That company has a market cap of 50 million. But the turnover was $418. I was going to have a look at that company, but with a turnover of $418, it's just one person selling shares. Let's have a look. In this, you probably see the lack of liquidity just by looking at the buys and sells. Yeah, you can see the difference between the first buyer and the first seller is actually 4 cents, 20 cents and 24 cents. Course of sales today, there was one trade today, 2,200 shares traded. And you'll be looking like a fool today for selling your shares in that company, because somebody's already, actually two people have already put bids in for shares at 20 cents. Although you only sold shares that were worth $418. You probably don't care. So I'm not going to look at Sports Entertainment Group. That's the wrong tab. That's the wrong tab as well. Top losers, otherwise, I'm looking for big markups. Nothing big until we get to Cettire. Okay, let's have a look at the markup. So Acadium lithium down almost 10%. So it seems like lithium prices are down again. So core lithium is another bad performer. Okay. So, Dicker Data down 9.8%. What's happened there? Did they go ex-dividend? Although that dividend would be a pretty big dividend. Let's have a look. Dividend. Ex-dividend the 14th of February? No. Even though they did. Okay. Partial share sale, David Dicker. And this is why I didn't see it, because it's not marked price sensitive. This is why this is ridiculous. So in fact, Dicker Data down 10%. So partial share sale, not marked price sensitive, yet the share price dropped 10%. And the whole reason the share price dropped 10% is because of this particular announcement that David Dicker has sold some shares. And I can tell you, without even looking at the announcement, what he sold it at. So if you look at the course of sales, so volume was 20.5 million. In fact, if you look at Ticket Data's chart, you can see massive volume coming today. That's because Dicker Data has sold some shares. Is his name Dicker Data? He's a founder. I'm pretty sure he's a founder. Hey, David Dicker. Dicker Data? Did I say, was his name Dicker Data? Was his name David Dicker? That's what I meant. His name is David Dicker. Anyway, so let's have a look at what price he sold his shares. Without even looking at the announcement, we can do this easily. So let's go to summary, go to course of sales, and this would be like the first sale of the day. Here we go. So he sold shares at $10.90. He sold fair few, about 18 million shares, totaling $200 million. Well, David Dicker is a rich, rich man right now. He has a lot of money. I'm pretty sure he's getting pretty old too because he started this company in the 70s. So what was that 18 million shares? Now let's have a look at the announcement for Dicker Data. And it'll tell us that he sold 20 million shares or something at $10.90. Was it 18.3 million? Yeah, there we go. 18.3 million shares at $10.90 represents 10.2% of the company. And what the market is thinking now, because the share price is just below $10.90. Well, if David Dicker thinks this company is worth $10.90 per share, then this company must be worth $10.90 per share. So we are going to sell our shares towards $10.90. This actually makes perfect sense to me. Sometimes I say, well, just because the CEO or founder is selling shares doesn't mean you have to overreact, but I sort of can understand it, that the market is thinking, well, if he thinks the company is worth this much, then I should sell my shares. And I don't understand why he's selling them at $10.90. He could have got a much higher price than that, surely. Now, let's have a look at the chart. Is this a possible trade? Now, I did trade Ticket Data during this period here. Then I sold here, and I thought I made a mistake because the share price started to rally. So I'm really glad in this instance that I did sell some shares. Is this an opportunity? Share price is right on the 150-day moving average, which typically is a nice little support level. In fact, if we put in this, it's right in the support zone, we'll call it. So I just put in, I just like to get rid of the shaded or the long-term moving average channel or shaded area just to make everything more clean. And I can sort of visualize it anyway with this 150-day moving average. And Dicker Data might be in a sweet zone, right? I am going to say this is a potential buy, a potential trade. But Dicker Data, what I do is I write down the D codes and I have a little piece of paper in front of my screen. So when I come to the computer in the morning, I know to have a look at Dicker Data again. I did that with Ramsay Healthcare yesterday. And this is it's just a system that works for me. Otherwise, I completely forget. I have other systems. I have watch lists in here called Daily and A-Looks. And that reminds me to have a look at some companies' charts every single day. So Dicker Data, this could be an interesting little trade. And what I'll be looking for here would be maybe a 10% upside. So what was the share price again? $10.84. I'd be looking at it, if it got back to $12, I'd probably be selling. That's a big if. So maybe not a massive upside, but the share price was $12.60 not that long ago. I think this is just the market panic. Not the market panicking. I sort of understand it. Okay, I understand it, but it's still, yeah. Anyway, and I have seen in the past when the share price of a company falls a fair bit, and then the share price recovers fairly quickly. And a perfect example of this is Doug Technology. Let's have a look at Doug Technology chart. And on the 29th of November, 2023, so let's have a look at Doug Technology announcements. What was it, 29th of November? So we have to look at the 1 year. 29th of November, they released an announcement the day before at 4:31 p.m. Sale of shares. Okay, so let's have a look at this announcement that caused the share price of Doug Technology to drop over 10%. I think it was like 11%. So here's what this announcement says in regards to the sale of shares. Doug Technology advises that Sheila Lamont, the spouse of co-founder and managing director Matthew Lamont, has sold 2.5 million shares. Sheila made the sale in order to retire debt. The shares sold are a small percentage of Matthew and Sheila's holdings in the company. The market doesn't care how much they sell shares for or why they sell shares for. They just care they sold shares because they think the insiders know something bad about the company and the share price is going to absolutely tank. And on this particular day, share price fell 11.4% and recovered within 2 weeks back to the price where it was. And then a few months later, the share price had risen by about 50%. Yes, 50% upside in Doug Technology from the low. In fact, the low was reached the next day from the low after this announcement that the spouse of the co-founder and managing director was selling some shares to retire debt. I have no problems with people retiring debt because debt is an absolutely awful thing. I have no debts right now, 0 debt. And the main thing I did just prior to COVID-19 was to retire my debt. It is a great weight lifted from your shoulders. Anyway, that's just me. Not a big fan of debt. Debt is really a modern phenomena. We didn't exist with debt in the past. Very little debt. Most people didn't have debt. It's a very modern phenomena. Other bad reporting companies, not reporting, other bad performing companies, Iris, not surprising there, down 7%. I did a video on Iris. So look at that video if you don't understand why. I'm going to focus my attention on Cettire. Accent Group down 7%. I'm going to have a look to see what happened with Accent Group. Again, it could be the company went ex-dividend, no announcements. Let's have a look, ex-dividend. If it went ex-dividend, I'll just ignore this company. Ex-dividend date, 6th of March. Yeah, it went ex-dividend. I don't care about companies going ex-dividend. Paragon Care down 10.4%. They were my company of the day yesterday. I was thinking maybe taking position, but a little bit of selling today. Now, sometimes when share price of a company rises a fair bit in one day, you will see a little bit of selling the next day. If there's very little selling the next day, that's actually usually a positive sign. But this is a little bit too much selling that what I would like. But if we look at the 5-minute chart, yeah, selling actually came through in the second half of the day. Yeah, I actually had a closer look at this, and I probably wouldn't be willing to trade Paragon Care just yet. Maybe if we saw the share price get to 25 cents, I might take a fairly risk-free trade. So I'd buy like 25 cents, and the share price fell to say 24 cents, 23 cents. I'll just sell at a slight loss. And anything else here? Shaver Shop, I would assume that company went ex-dividend at 2. 6th of March. Yep, 6th of March. And I think that's it. I'm not seeing any other companies that I remember. Yeah, nothing here that I really want to talk. Now, Cettire, down 14.4%. This needs to be looked at. Finished or closed at 399, down 14.4%. So, yeah, it's 331, which means a market index has now updated. No chart available. Okay, let's have a look at the announcements. I don't remember. Okay, so for those who haven't heard, what I usually do every trading day is before markets opens, I go through the announcements, and then right on opening of the markets, I might stick around for 10 minutes just to see how some companies do perform when they do open. But typically from when trading begins all the way through to when trading ends, I go away from my screens. I might watch some TV, read books, do other stuff. I don't really want to focus on the market. Sometimes I will. I will admit, sometimes I will have a sneaky look at how some companies are performing, particularly if they have released some negative or positive news. But I did not see Cettire release anything today in the morning. So what I'm looking for is price-sensitive announcements, particularly profit upgrades, profit downgrades, or anything like that. So let's have a look what happened today. So yeah, at least they did release 2 market-sensitive announcements today, and there was an ASX price query or a price query from the ASX. So share price tumbled for some reason. And obviously, the first announcement this company released today was at 12:05 p.m., 2 hours before the ASX price query response. The response to a media article. Okay. Response to a media article. All right. Refers to an article in today's Australian Financial Review. Oh, there's a lot of stuff here. I am not going to read all this in this video. I might leave this for another video, a standalone video, so I can actually go through this. Give me time to go through this. But obviously, there was something in the Australian Financial Review that caused a bit of a panic. Now, the next thing I want to do is have a look at how Cettire traded today. Now, that announcement was released, response to media article was released at 12:05 p.m., which would be 11:05 p.m. 11:05 a.m. my time, and response to ASX price query. Let's actually have a look at that. was 1:28 p.m. my time. Just to see if there's anything extra in this announcement. Why is it not opening up? No, not applicable. And then section 3, they do talk about the article in the AFR. This is a little bit shorter. Let's have a look at what they said here. The AFR article may have contributed to today's price movement. I would not have said may have. I would have said did contribute to today's price movement. I would be a little bit more forceful in saying the reason why the share price dropped 14% was because of this article in the AFR. Even though I have not seen this article in the AFR, just the very fact the share price dropped a fair bit is, and in fact, I'm going to have to see if the share price fell a little bit more and how the market responded when the company actually issued their response to the media article. The article did not contain any material non-public information regarding Cettire, and it is difficult to see a direct connection between any information in the article and the price movement. Okay, so maybe they're confused. So maybe I was being a little bit maybe I was making assumptions that the reason the share price dropped was because of this article, because they're saying there was no information in this article that should not have been unknown to the public. To the extent that the article may have incorrectly drawn implications regarding Cettire's customs clearance practices, we have already released an announcement to ASX today to clarify the position. Okay. So they're making me confused there for a second, and then all of a sudden, in that second sentence, yeah, definitely this article caused the share price to drop. To the extent that the article may have incorrectly drawn implications regarding Cettire's customs clearance practices. So straight away, that's why the share price dropped. AFR were questioning Cettire's custom clearance practices or something to do with that. Again, our announcement did not contain anything which we consider to be material, non-public information. Okay, so I'm going to do a standalone video on Cettire, and I'm going to have a look at this AFR article. I have not had a look at it. Now, let's have a look at the chart for Cettire. I'm not sure when I'll do this standalone video for Cettire. It will be the next few days. I don't want to do it tonight. This will be my second video released today. Anyway, so this is really interesting. Now, here's something else interesting. I just noticed by looking at this. So the CEO and founder sold some shares 2 days ago. Did he have information that the AFR was going to release this article after he sold some shares? Now, to be fair with you, and I wouldn't be surprised if he did have a feeling or he did know that there was this article in the works, because whoever wrote this article more than likely got in touch with Cettire. Oh, conspiracy theory here. Did, what's his name, Chris Mintz, sell shares because he knew this article was coming out and he took advantage of it. Oh, woo. Okay, that's just me being a conspiracy theorist. But it is a little bit coincidental, too much coincidence, that he sold a large allotment shares 2 days before this announcement or this article was released. Really interesting trading today. In fact, I'm going to look at 1 minute chart because there was enough trading to look at 1 minute charts. And this is the whole trading today. So on open, the share price dropped 20%. So obviously, yeah. So obviously there's something in this article that really spooked the market, because not only that, share price dropped even further. In fact, the share price dropped from 464 to a low of 340. What's that in the percentage changes? So 120 divided by 460, 120 divided by 460, not quite. I can't do the maths. I'm not that smart. I'm not quite that smart. I do have a calculator somewhere. Obviously not. 120 divided by 460, I was going to say 25%. 25, yeah, about 27, 28% or something like that. Yeah, we'll say 27, 28%. So share price fell 27 or 28% within the first few minutes. And the low of the day was at 341, and that was in the 5th minute of trading. The 5th minute of trading. Then there was a bounce, which is understandable. And you can definitely see where the company released their response to that media article. Share price in the minute they released that. Now, they released that article at 11:05, and then trading began at 11:16 or 11:15. So there is a 10-minute delay between when a company releases a price-sensitive announcement and when trading begins again. So that is why the share started trading at 11.16, so they would have started trading at 11.15. So this is a 1 minute chart, and the share price in that first minute rose 7.7%. Kept on rallying over the next 5 minutes, and the share price did find a base during the rest of the day. So it looks like there was a little bit of panic selling during trading. Share price down 27%. So this article is going to look really interesting, and look out for that video in the next few days. Who knows when I'm going to release it. And I think that's it for today's video. So a really interesting day on the markets. A few companies down a fair bit. Dicker Data down because of David Dicker selling some shares. Cettire down because of a little bit of a beef, maybe not a beef, because of an article from the AFR. It's going to be really looking forward to reading that article. ASX Group and Shaver Shop down because they went ex-dividend, and a few lithium companies down big as well. If you have any questions, any thoughts, just leave those in the comment section of this video. Otherwise, that's it for today's video. Have a good day. Talk to you later. And don't forget, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.